Let's take a look at how geopolitical risk in Europe and the Middle East can affect us here in Australia, and whether the long bull market in shares is going to continue. It's been nearly 6 years since the peak of the Eurozone debt crisis, and by and large, European economies have come a long way. The recent Italian election reminded us that underneath the surface, things are still a bit fragile. Italy was one of the countries at the epicentre of the Euro crisis in 2012. Along with Portugal, Ireland, Greece and Spain, the Italians saw their government bond yields soar as investors began to fear that they might default on their debt. Since then, growth in Europe has recovered, but it's been uneven, and Italy is one country which has been left behind. We saw a sharp increase in volatility across global markets, as for a few days there, it was thought that the incoming government might favour leaving the euro. That would be a pretty big deal, a quit-ally to go along with Brexit. Global economic growth has been pretty strong over the last few years, and we've seen the impact of this in higher commodity prices. The oil price, for example, has risen from around $26 a barrel back in 2016 to a peak of $72 in May this year. This has pushed up petrol prices nearly 50% locally. The good news is that most forecasters expect that oil prices have peaked, as plenty of new supply can come on stream when prices are above $40 a barrel. On the other hand, oil prices do tend to go up when geopolitical risk increases, and tensions in the Middle East are on the rise again following the US withdrawal from the nuclear deal with Iran. Since global share markets took off in 2011, we've had 7 years of strong growth, nearly 14% per annum in Australian dollar terms. Some markets are looking a bit expensive, and while this isn't necessarily a cause for alarm, it's probably unlikely that the next 7 years will be as good. There's an adage that bull markets don't die of old age, and while the fundamental drivers of growth remain strong, this bull market might keep going a little longer. Geopolitical risk is always with us, and sometimes markets react more than others. Another crisis in Europe, an inflation shock, a trade war or a real war somewhere could all be triggers for a market sell-off. For a long-term investor, these corrections can represent opportunities, provided you hold a diversified portfolio, don't take more risk than you're comfortable with, and are able to stay the course.